Friday, April 28th, 2017, Maneco 64, home of alternative economics and contrarian views. So it's around 20 to 2 p.m. London time. We've just had U.S. economic data. Specifically, it was U.S. GDP data for the first quarter. Is the preliminary number. They've got a preliminary and I think advanced and final number. So they revise it like a couple of times after this number. So first quarter GDP came out at 0.7 year-on-year number on an annual basis for the first quarter. The consensus forecast was 1.2%, so a lot weaker than expected. It's not a huge surprise, I would say, because we've had some Federal Reserve like member banks or regional banks coming out with forecasts as low as 0.2%. I think it was the Atlanta or St. Louis Fed. New York Fed, though, was looking for 2.7%. So that was way out. And JP Morgan, I think they were looking for 0.5. So it is weak, and it is somewhat of a surprise, but not a huge surprise. We also had earlier today the UK GDP data for the first quarter, and that came out at 0.3, and I think it was expected 0.5, and that's actually on a quarterly basis, not an annual basis, but it was weaker than expected as well. What else? Well, the market reaction to it. Let's start with precious metals. Gold and silver haven't really done much after these numbers. Gold is a little firmer today. We've had a low of 1263 on the spot and a high of 1268.73. Right now, gold is 1265.50, up just over a dollar. Silver got to a high of 1744 earlier today. But as usual, as when the US comes in, it drops. So right now we're at 1732, up about 6 cents. The Dow pre-open, Dow futures right now up 7 points at 20,985. S&P up 2 points at 2390. The dollar, in terms of the dollar index, is down 1/4 point today at the moment at 98.89. So the dollar weakening in terms of the individual currencies. The pound's still fairly firm. Ever since the announcement of the snap election, the pound has gone up, and it's now 21. From around 126, we're now at 129.20. The high has been 129.57. Dollar, though, still strengthening against the yen. I've made videos about that. That's an important cross rate. Dollar right now 111.60, up 1/3% against the yen. 111.06 has been the low, so now 111 is the key support. The euro is quite strong, is up 0.5% almost, at above 109. We had some European data today on, I don't like to say inflation, but that's, people call it now, but it's actually the consumer price index. And it came out at 1.9% year-on-year. And the ECB target for CPI is about 2%. So I think that's probably increasing the likelihood that the ECB might, decrease their QE or even stop their QE. They've got no excuse not to keep doing QE if the CPI or inflation. And the reason I say that, because inflation in my book is purely a monetary phenomenon. It's the creation of credit out of thin air. That's what inflation is. And rising prices is the consequence thereof. So What else? Well, the bond markets. I haven't really looked too much, covered it too much lately, but the 10-year yield is still fairly firm, I'd say, despite this really weak GDP, 2.33. It looks like we're right now in a range between 230 and 260. So not much signal out there in the bond markets. I know the bond markets are huge. You know, I was watching an interesting video earlier today, Max Kaiser and Mike Maloney of Gold and Silver, and they were saying, you know, the supply of debt has increased so much since '08, and normally common sense would dictate that the more debt you issue, the lower the price of that debt will go and the higher interest rates will go. But the thing is, we've had central banks manipulating interest rates through, you know, the creation of money out of thin air, or QE, to manipulate interest rates low. I don't think that will last forever. They don't either, Max Kaiser and Mike Maloney. And the other side of the coin is that, you know, the supply of gold is limited, of course, and China and Russia and they've been buying most of the physical new supply every year, and you know, it's a rare commodity, can't be printed out of thin air, but the prices remain quite you know, subdued or suppressed, if you want to call it, and that can't last forever as well. It doesn't make sense. So that's the biggest I guess discrepancy there. The manipulated yields and the manipulated yields down here, and the price of gold down here as well doesn't make sense. Max Kaiser noted something interesting, that if you compare the amount of debt there is in the world to the gold price in 2001 when it was at $250, and you compare the amount of debt that we've got now in 2017, the price of gold is more undervalued than it was at $250 an ounce. So I don't have, you know, as I repeat most of the time, keep, you know, stacking physical gold and physical silver if you can. What else? Cryptocurrencies been doing fairly well lately. Bitcoin is, you know, above 1,300. I think we got up to, let's see what the high is, recent high. I think, yeah, almost up to 1,350 Bitcoin. So and now we're at 1,308. Ethereum is continuing to do very well. Let's see, where is Ethereum now? I remember, you know, started falling again a couple of months ago when it was breaking through 20. We're now 66. Yeah, what can I say? Yeah, take profits, you know, hang on to it. Don't bet the house on it. It's very interesting. Very, you know, that seems to be the main cryptocurrency moving right now, aside from Bitcoin, of course. And what else have we got here now? No, that's it. Well, just one more thing about, you know, socialism, the welfare state. There was a guy on the radio this morning, James O'Brien. He's a left-wing leaning presenter for LBC. And he was going on about how come, you know, we seem to be running out of money. You know, the schools, the kids have to bring their toilet rolls to school. And he's talking about state schools, or public schools as Americans call it. You know, the care in the NHS, which is the socialized, you know, health system. You know, we can't afford it. And he says, you know, I don't know who's taking the money. You know, someone tell me. Well, I can tell him that, you know, unfortunately, when the welfare state really got started, and I think it was the roots of it was 1908 in the UK, when they started a state pension for I think for every man above a 65 or something, I think a certain age. And back then the life expectancy was probably below that, so it wasn't a problem financing it. The problem we got now is that even though the welfare state has very good intentions, in practice now it doesn't work anymore, because to finance the welfare state, the government has had to tax the public. You know, government is never efficient. A lot of times there's corruption, and they inflate the currency, so they have to increase taxes. And when they increase taxes on families, you know, and they push for women's lib, and I'm not saying I'm against women working, but what's happened is, you know, you don't have families like you have in the 50s and 60s anymore, where only one person needs to work. So, you know, people have more children. So we basically, we've got the wrong recipe for the welfare state right now. We had the right recipe maybe in the 40s and 50s, but now, you know, there's population is aging. The money's running out. The money's been inflated. A lot of the money has been used to save the banks after the '08 crisis, and to save the governments as well, because without the banks to finance the governments, the banks can't continue the welfare state. So it's a really bad combination. So not enough children growing into adults to support the increasing amount of baby boomers retiring and claiming their rightful, you know, pensions, state pensions that they paid into all their lives. So that's the problem, James O'Brien. And what's the only way to solve it? Well, you can either inflate the money away, so you inflate all the liabilities of the government away, or you collapse the system. Or you keep going as you're going right now with financial repression. You punish the savers, you know, with artificial low interest rates to keep house values up. And why do they want to keep house values up, house prices? Because it's the flip side of the banks, you know, it's the bank's balance sheets. It's their biggest asset. So they need to keep that inflated to keep going. But that hurts, you know, the younger generation, because their wages are maybe going up, but as government lies about inflation and the rising cost of living, their wages don't keep up with the cost of living, so they can't afford to buy a house. They have to rent. It's a big mess. The solution, there isn't really a solution. And whatever the solution, well, if there is a solution, you know, either the system collapses or you inflate all the liabilities away, it's going to be painful no matter what. As Margaret Thatcher would have said, you know, socialism is a nice idea and the welfare state, good intentions, but eventually, you know, governments abuse their power because it's a monopoly, and they've got no you know, checks and balances. You know, politicians, they don't want to vote. You know, they're like turkeys. They're not going to vote for Christmas. They will always want a bigger welfare state because that means more control for them. The only politician I think that doesn't want a welfare state is Ron Paul, but he's a huge exception to the rule. So if you enjoyed this video, a bit of a mix between the markets and, you know, economics and the nature of socialism, please give me a thumbs up, share it far and wide, the video. If you haven't subscribed to my channel yet, please do. If you'd like to make a donation to the channel, if you think the information I provide is valuable, there's some links below in the description, and I'll talk to you later. Take care. Bye.